Alright guys, so we're going to get into the how to trade actually with TD Ameritrade, Webull, Robinhood. So if you're on Robinhood, all you have to do is sign in and then you're there. But it's a little more complicated with um, with TD Ameritrade and Webull. So Webull, you just go on their website and you download their desktop app and then you click this. And then you sign in and everything, but I'm going to be going over the basics of this, So I have a lot of indicators on here, but I'm just going to be explaining the most simple ones and how you can create a pattern off of that. So here, I'm going to put it in dark mode really quickly so you guys can see it better. So first, I'm going to be explaining. Alright, so that's the. Alright, so first I'm going to be explaining basically I'm going to be explaining what these three indicators are. If you're on Webull, if you're on TradingView, no, if you're on what's it called, man? If you're on Thinkorswim, download Thinkorswim while I'm doing this, but some of the indicators are the same. So for people with Thinkorswim, you don't have the KDJ, which I think is one of the most helpful indicators ever. Alright, so we're going to be going over my favorite indicators, and you don't really need this one, but it can be helpful to identify trends and directions. Alright, so the first one, you can see how it's really smooth for me right here. That's because I have Helsinki Ashi. Now, I didn't start making money until I put this on, so you can see that this is what it looks like stock, and you can't really identify your direction really well because it's kind of just jerky and all around rough. And also, you notice that your indicators are not as smooth. So what this does, you want to come up here and hit this, and what this does, it smooths everything out so you can identify trends. So you can see once it's green, it identifies a green trend up. And how it does this is by averaging the candles and plotting them on a chart, So that's super simple. And what you want to do as a small trader is look for trends, If you look for trends, you're basically really solid, all right? Then you're going to want to come over here and hit add EMA, no, MA, no, MA, then scroll down to KDJ, MACD, and then RSI. So you can see you're going to want to do a bit of editing, but you can see every single time you're going to want to, you're going to want to do a little bit of editing. 180. So depending on what type of trader you are, you can make money either way. But if you're a fast trader and you have a short-term mentality, you're going to want to tune this for 15. Just, yeah, there you go. Boom, 15 EMA. Moving average. So you can see this is how to trade it. You can see every single time it goes above, like right here, it's a spike up. So this is the start of the day, so you don't have to worry about that. But right here, look, it goes right above, and then it pushes it uptrends all the way until right here. So then, as you can see, like, look at from there to there, you just trade it right off of that. But the 15 MA and 15, this is pretty much all moving averages. If I went for a 50 MA or a moving average, you can see every single time it jumps above, I could buy and make money off of it. Buy, make money off of it. I could sell at the worst time, which would mean that it would come below here. What you want to sell is by these other indicators and just your pure gut instinct, all right? So as you can see, pushes up, boom, comes down over here. It's good, all right? And then as you can see, it goes up, goes down, gets rejected. So rejected means that it goes up on the stock, and then it basically touches this line, and if it doesn't go past it, or it doesn't go above it or below it, it is a rejection. So you can see rejection, rejection. Finally, it pumps up, boom, one candle. So this is called the starting candle. It's the first candle that's not touching the line, and it's a change in direction candle. So like right there, that's its first starting candle. Boom. So that's basically like a gunshot for horses, like at the start of like a horse race, you know? Starting candle. Look at right here would be your starting candle. And you can see that, wait, how to read the Helsinki Ashi lines. You'd see that there's these type of candles that have a tall and a short body, tall wicks and a short body. That is called a doji candle. I'm not sure if I'm saying that right, but it's just how it is, and it typically identifies a direction change. So you can see that it does it when it pulls back, like right here. There's a small, comes up here, it does it again, does it right here and right here, does it right here, right here, right here, right here. So it's indicating a direction change. Then look, it does it right here, and then finally it comes down. So you just have to look for those patterns, you know? So you can see the KDJ. How to read the KDJ. If you're on TradingView, you don't have to worry about this, but KDJ, it indicates break points in the stock. So you can see right here, the lines are touching, so that could mean either one of two things. It's going to continue and break down, or it's going to break up, and it's going to be a direction change. So as you can see, boom, break up, and it starts to pull back, so then you sell at the next intersection of them, boom, then you buy at this intersection of them, boom, it pushes up one more time, and you have made, man, where is it? So that is 2% basically, and then you made another, let's, then you made another 2%. No, you made 4%. So you made a total of 5% in, how many days are that? Delete. I'm sorry, I'm having a rough time. You made a total of 5% in 1 day and 19, well, just 1 day pretty much, or 19 bars. So that's basically how you use the KDJ indicator. It's just a direction indicator. It's also a volatility indicator. How I use the volatility indicator is, well, you can see that the farther that the lines are angled apart, the stronger of a direction that is. So you can see right here, it is indicating a really strong direction right there. And yet, as you can see right after that candle, it starts to move down even further and faster. Same with right here. Look, it does that, moves down right there, and then crosses again, and boom, it indicates an uptrend up until right there, which means you would sell at that intersection. All right, how to use the MACD. So the MACD is kind of like the KDJ. It indicates a direction, a buying point, and a selling point, pretty much. Now, it's not as good as doing that as the KDJ, but it is a nice backup. So here you go. This is the MACD. Crosses right there, so you have a late entry. So the KDJ is right there. But you would have had a late entry, and then you got to wait for confirmation. So that's one bar that they're split open. So you would have bought, it's actually right there on the chart. I mean, it looks bad, but then it starts to close again. And then boom, it pushes up, pushes up, pushes up, pushes up, pushes up. pushes up, crosses only right here on the chart. All right, so that's when you would sell, of course. But then the next time that you take a buy, it'd be less likely that you would take a buy, actually. As you can see right here, it goes up. I want to explain to you something really quickly. Everything above 0 is crap, is a really bad buy with the MACD. So it's higher risk than a one below 0. So you can see every single trade above 0 is kind of sloppy. Like right here, it's really sloppy. You would have gotten in right here, really sloppy, and then broke down here, which means you would barely make any money on that at all. So it's higher risk if it's below. It's a higher risk if it's above 0. So like right now, it's indicating a downward trend right now. So I actually have stuff in SQQ, but I'm going to talk about that later. So you can see it's really, really hard direction down. But right here would have been a really good spot to get in. Boom, right there. Then it pushes up, and then you would have sold. So you actually wouldn't have made any money on that trade, but it's less likely. It's more likely that you would have. So you're already 50% profitable if you just follow the MACD indicator. All right. So as you can see, it's still below 0. It breaks right here. Your feelings might be hurt a little bit, but you got to push past those feelings. And boom, buy, sell, buy, hold, 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 sell right now. So as you can see right here is where you would have got in. That's a total of 7.21%, or you could have even gotten as good as 10.5%. All right, so just simple things like that. So then there's one more indicator that I want to talk about, and that is the relative strength index, and that is called the RSI. That's what it stands for. Sorry, I sit in my chair a lot. It's called the RSI. All right. So if it's below 30, it's considered a good buy. And if it's above 70, it's considered overbought. It's considered overvalued. So this is one of the most important indicators ever, pretty much. So you can see right here, if you bought and then you sold once it touched the 70 RSI, that would be a great trade, Great trade. So regardless of day trading, swing trading, everything, it'd be a good trade because you technically bought at an undervalued price and you sold at an overvalued price. Regardless of how much money you made, that is a good trade. All right. So you can see right here, falls down below the RSI. These two are saying that it's not going to go up. So what I look for in a stock is it's recently undervalued. It started to climb in value. The KDJ just started to open in my favor. The MACD lines are closing, which means they're swooping in and about to change direction. So I would have bought right here, maybe. Right here. On this red candle, I would have bought. Boom. You can see that I like to sell at the first signs. So if any of these indicators are telling me to sell, I would sell. Right here, boom, the KDJ is looking like it's breaking down. I would have sold right there. That's like a 3% gain. Comes up here. I would not even take that trade. Not even. It's not indicating a good uptrend or a reversal. I would not even take it. Skip that trade. Still below 0. The KDJ is looking really fresh. I would buy and sell. I wouldn't make money on that trade, but I'd still make money on the trade. All right, so then the KDJ breaking one more time. Looks like it's going to get rejected, but it doesn't. But it's recently been undervalued. Everything's looking good. It just passed the SMA line. So the most important indicator is this line. If I was going to pick one indicator to trade with forever, it would be this line. That's because every single time Every single time it goes below, it's rejection, and every single time it goes above, it's considered a good buy. Um, so yeah, that'd basically be the best stuff to trade. So please go watch some videos on how to trade with. I mean, if you're using Webull, then you're fine. But if you're using um, Thinkorswim, please go watch some videos on how to set up all the indicators. It is the same exact thing, um, but yeah, it's the same exact thing. All right, so see you next video.